Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today acquired a portfolio of nearly 500 units worth around $40 million before founding his current company and has experience self-managing several large multifamily assets. David Toupin is the co-founder of Obsidian Capital. David, welcome to Purchase to Profits. It's great to have you on the show.
Thanks, Seth.
Yeah, really looking forward to this. So I always like to talk with other young guys involved in real estate. How old are you? How old are you right now?
I'm 23. I'll be 24 in about 2 weeks.
I'm
pretty
awesome.
young.
That's awesome.
Yeah.
Love it. And you are crushing it right now. You do a really good job with the videos you're posting as you're walking through doing inspections and all that stuff.
Yeah. You're in our Facebook group or Instagram. Yeah, I post on all those.
Yeah, no, that's great. So let's get into your real estate goals right now. Like, where do you want to go with real estate?
So it's kind of changed as I go, right? Because to be honest, when I started 3 years ago, I didn't think that I would be where I am at this point in time. So, but it's funny, one of my first goals I ever wrote down, I found this notebook a couple months ago when I was moving from Michigan to Austin, Texas. And the goal said, I want to buy 500 apartment units within 3 years. And this was after I read Grant Cardone's 10X rule. And I was probably thinking maybe I'll hit 50, 10X that. So write 500 down and we'll see what happens. And it just so happened that I found that notebook just about a month or two before the 3 year period came up, and I've bought about 520 apartment units since then. So that's kind of crazy what happens when you write down your goals and you visualize things. And right now going forward, I want to build $1 billion company. So I would like to be at $1 billion in assets within the next 10 years.
Nice.
That's kind of my primary goal. We're starting to get into some new development projects right now. I've got a couple ground up multifamily and commercial projects we're doing, and we're looking to just obviously keep buying existing multifamily assets. The main goal is I want to hit $1 billion in assets in the next 10 years.
I love it. We share the same goal, so we'll have to check in with each other in 10 years.
Let's do it, man. Have a little race.
Yeah.
Friendly competition.
That sounds good. And so you mentioned you're doing some ground up and then also buying some existing product. Some people will only stick to one side of like the path. What had you kind of go and dip your toes in both?
Yeah, so I'm all about focus, to be honest. I'm all about picking one thing, getting really good at it, and scaling, because I think that's how all the biggest companies in the world have been able to scale and grow fast and efficiently. So development's, I guess, a little bit outside of buying, existing assets, a little bit different. There's a lot of nuances to it. It's definitely something that it's not easy to get in if you don't have experience in it. So that's been a roadblock, but not something we haven't been able to overcome. But it still goes in line with what we do. We're real estate investors and developers. We buy and renovate apartments. And when we saw in Austin, Texas, that B-class product is selling for, 1980s properties are selling for $120,000 a unit to $140,000 a unit. And we're looking at development costs in the all in with land in the $130,000 to $140,000 unit range. It just makes sense for us to go and build it instead of buy it. So when we saw that led us down the development path. Plus we want to build a legacy portfolio. And these are properties that we're going to buy with our investors and hold for 10 plus years, and not have to worry about a ton of deferred maintenance coming up, capital calls, stuff like that. So that's kind of part of the reasoning behind it.
Yeah. And plus you have full control and kind of you're building the product that will fit your model and your view of how to manage the multifamily asset as well.
Exactly.
Yeah.
Perfect.
And I have to ask, most people, and especially me, when I was, let's say 20, I had other things on my mind besides acquiring real estate. I wish if I could go back in time, I would have started a lot earlier than I did. What got you involved at such a young age?
So I was doing a couple internships during college in investment banking and auditing, a little bit of consulting. Um, and I kept seeing, I've always had really big goals. And what I saw was, a typical progression to becoming maybe a partner at one of these firms where you can do fairly well, make a good amount of money. It's like a 10, 15-year progression just to get to that point. And for me, I'm like, man, first of all, I want to do this a lot quicker. Second of all, I don't know if I really love, working for a corporate job and working for someone else. I started my first business when I was 13. It was a landscaping company, and it wasn't huge. I maybe had 30 some accounts in my neighborhood that I ran, but I loved doing that. I loved working for myself. So I had somebody mention to me that I should check out some podcasts. And this is when podcasts were kind of starting to get big. And I first went to the business section and found Bigger Pockets. And I think I binge listened to 100 plus episodes. Somebody had mentioned on there to read Rich Dad Poor Dad. So I read that and I was hooked. I loved real estate. And for me, it was kind of a function of listening to a lot of people on these podcasts saying, I'm doing great now, but I wish I started when I was younger. And everyone said that. So I just decided, why not start while I'm young?
Yeah, for sure. And, I'm sure you get this too. People will ask me, and I'm sure yourself, hey, I want to get into real estate. I've always wanted to do it. How can I get started? And then they never actually do anything about it. They never take action. What was it about you that actually had you take action at a young age when there's people, let's say in their 30s with all these assets and they never end up doing anything?
Yeah, I think part of it is I didn't have any fear. I think fear is the main thing that stops a lot of people. Yeah. That's the biggest thing. Whether you have a family and kids, and rightfully so, you're afraid to maybe take that leap from leaving a full-time job to go in and doing real estate full-time. Not an easy task. So I totally understand how there can be fear there, or fear when you're young of, maybe I'm too young, I can't do this. I'm not able to because, I don't have the knowledge or the ability to do it. For me, I think I just lack that part of that piece of my brain is just not there. I don't have fear. And I ended up taking the couple job offers I had, coming into my senior year in college. I turned them all down. Right when I got on my last internship, I turned down a couple six-figure job offers to corner myself. I burned the bridge, and there was nowhere left to go but forward. So I honestly didn't really have a choice unless I wanted to be, not making any money.
Yeah. Cutting the cord is so important. I see this a lot with people because when you have that safety net, there's still something in the back of your mind that doesn't have you commit 100%. And I like how you mentioned fear. The way I think about the fears, I actually fear, the way I got started in real estate investing, I feared not reaching the potential and acquiring the assets. That's what I was afraid of.
Totally. Same thing.
The other way around.
You're so right. Right. And I think that's what a lot of successful entrepreneurs have, is you have the fear of, like, when I go a couple of days without working, or I'm on a vacation now, man, I start feeling a little anxious. Like, I got to get back to it. I'm not doing enough. So we've got that fear of not hitting our goals, and that's what drives us. Yeah, I agree.
Yeah. And so, as your company's growing, have you hit any plateaus? And if so, how did you break through those?
Plateaus. My first plateau, I think, was I had a business partner originally, which we kind of talked about, and it for various reasons, it didn't end up working out. We didn't have the same visions anymore. We wanted to kind of go separate ways. This is about a year and a half ago. And so I decided to kind of split off, go on my own. And that was a big plateau for me because I had, since I started, I had a business partner kind of from the get. We bought a couple assets together, and then I was now out on my own. And my goal was to kind of find, someone who's more experienced, another business partner that I could work with that would, I could provide a ton of value to, help them grow. They can provide a lot of value to me, help me grow. And it's kind of like one of those scenarios where 1 + 1 = 10 instead of 2. And so I kind of hunted for that all 2018. And I ended up finding a guy here in Texas through a multifamily mastermind called the Multifamily Boardroom. boardroom. It's run by Rod Cleef, and his name is Glenn Gonzalez. He's my current business partner and co-founder of Obsidian Capital with me. And he's owned just about 5,000 apartments. He had a $300 million portfolio of multifamily real estate. And he had, over the past couple of years, the market's hot, sold it all off. We met, clicked really well. He wanted to keep growing. I wanted to keep growing. So we linked up, and that was kind of a new beginning for me and him.
For sure. And, I like how you mentioned the partnerships. How important was a partnership in terms of leveraging that credibility, especially, you had just left your previous partnership. You don't have much gray hair, or if any.
Yeah.
Careful, it catches up on you before you know it. But just talk to us about how leveraging other people's, CVs and experience has helped you grow your business.
Yeah, I know it's been massive. It's been huge. And I think that's any part of anyone's business growth, is working with people around you that you can leverage and also provide value to them. So, you guys can both grow together. And for me, being so young, I didn't have the net worth, the liquidity to go and get larger loans. My business partner now, Glenn, he has that. He has the experience. He has a track record. But he's also looking for someone young, someone that had a lot of hustle in them, somebody with experience, and someone that's really good at the underwriting and acquisition side of the business, which is kind of my specialty. I'm really good with the numbers. I know my way around a spreadsheet pretty well. I've kind of built one from the ground up over the past couple of years that helps me analyze apartment buildings. And he saw that, and he saw that I had already acquired about 120 units on my own. So we talked about it, and it just kind of made sense to try out buying a deal together and see how it goes, and see how kind of our skills mesh. And for me, it was perfect. He's got, like I said, he's got the ability to go and get those bigger loans. He's got a lot of experience. I've got a lot of that drive and hustle. I do a lot of stuff on the acquisition side, raising money, and it just was a great click. So we tried it out, and it worked very well.
Yeah. And what would you say is your number one challenge right now in your business?
Number one challenge, finding deals.
Yeah.
It's hot market. I think anyone will say that. Hot market. We're looking at tons. I probably underwrite with our team 20 deals a week, anywhere from 10 to 20 deals a week. And we're putting offers out, but left and right, we're getting overbid on things because we're pretty conservative. And we're patient. We don't need to do a deal to keep growing as a company. We've got some projects in the pipeline. We don't need to just go buy a deal and get acquisition fees to grow. Like we're pretty stable where we're at. So we're just waiting around until we find something good, and that it kind of is what it is. But we're looking at maybe targeting some new markets that aren't as hot as where we're currently looking in some of these places in Texas.
Yeah. And Texas is on fire right now. It's absolutely just nuts. Maybe tell us how you kind of keep your head and stay focused on the numbers, because it's so easy, when you're in that competitive situation, to kind of leave your spreadsheet behind and throw the extra dollars at it just to make.
Yeah. Well, there's two parts to it. There's the quantitative side of it. There's the qualitative. Quantitative, the numbers. In my opinion, the numbers don't lie. If on paper or in the spreadsheets, it's not cash flowing right, or it's not hitting the returns that my investors expect, and it's not passing our stress test, we just simply won't do a deal. Now, there's some cases where there's some things off paper that you can't really factor in, but might make sense to get a little bit more aggressive on a deal. Let's say there's I'm trying to buy a deal right where a new sports stadium is coming in down the street, right? That might be something that could really impact the market and explode a deal. There are things like that might cause someone to get a little bit more aggressive, but we tend to stick to the numbers because a lot of that stuff's opportunistic and it's out of our control.
Yeah, no, 100%. And so have you developed any routines or rituals that have helped make you successful?
I kind of have, and I've done, you probably heard of like the Miracle Morning and all that stuff. Yeah. I did it for a little while. I wasn't very good at sticking to it. One thing I am good at sticking to is kind of my daily schedule during the week. Every day, up until noon, I keep my mornings completely open, and that allows me to focus on mostly acquisitions and income producing activities. So looking for deals, underwriting deals, putting in offers, analyzing properties to buy, and really working on stuff that's a driving force of what's going to grow our business. And then the afternoons is normally when I'm booked with podcasts like this, calls, interviews, meetings, and whatnot. And admin work. So that's really helped me stay structured and not get sucked into what a lot of people do is they grow their business. They get sucked into this non-income producing stuff and income servicing activities and stuff that's not going to grow your business and stuff that really you need to do and separate that time out and time block it so that I'm making sure that every day I come in, I'm focusing on growing the business. And so I think that's been a huge ritual for me. Other than that.
Yeah, no, I like that one. And what you said is so true. And that busy work creeps in before you know it. Like you don't even realize it's getting in there.
Totally does. Yeah, all the time. And that's a struggle I think every entrepreneur has. It's pretty common. But if you can learn to kind of tame that and get it under control, there's no reason you shouldn't be able to continue growing just by time blocking well and structuring your day right.
Yeah, for sure. So let's move over to a Keystone deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
Yeah, I have two. So I guess I'm going to just talk about one though.
Okay.
But recently I bought a deal. And I'm going to tell this because this story is an anomaly. It's kind of crazy. This is the first deal I bought with my business partner, Glenn. We closed on it about 8 months ago, 7-8 months ago. It was in January of 2019. And it's 160 units in a tertiary market south of Houston, Texas, in a city called Freeport by Lake Jackson. And we bought this with the intent of being a 3 to 5 year hold value add strategy. We were going to go in and renovate half the units, get about $100 to $150 rent bump for each of those. We were going to repaint all the buildings, redo the pool deck, new pool furniture, new leasing office, renovation. So it's kind of a heavy, I would say a medium value add. We're going to do about $1.3 million in renovations. And we bought it for, just trying to give some upfront numbers. We bought it for $8.75 million in January. And a couple months in, about 2 months in, we had a gentleman come into our office and ask if we own that property. And he said, "I'd like to buy this property." We're like, okay, we're not really interested in selling. We just bought it 2 months ago. We're doing our renovations. And he said, "Well, stop your renovations. I'm going to buy your property." And it was kind of interesting. We're like, all right, what is this? Who is this guy? So he ends up telling us that he had some tax credit funding. And because it was in a certain zone outside of Houston, as you probably know, and a lot of your listeners, there was a Hurricane Harvey a couple of years ago. And it was really devastating to the city. So they have these grants. I just call it a Hurricane Harvey grant for renovating existing multifamily properties in specific zones. And he was able to get one of these grants along with a bunch of tax credits, which allowed him to significantly overpay for our property. And to us, we were okay selling as long as we had a certain level of return. So we calculated what that number is. And if we can hit our 5-year return levels within 6 months, we were okay selling the property. So it was funny. I emailed him. We needed to be at 11.2 million. And I think within 5 minutes, he emailed back. He says, "Done. I'm wiring earnest money right now." We had verbally negotiated $150,000 hard from day one. That's non-refundable from day one as a deposit. And he wired it into the to the title company before we even had a draft of the purchase agreement. So wow. It was crazy. It was crazy kind of how that went.
Well, that's awesome. You should have asked for 13.
I know. I should have asked for 13. It's just absolutely insane. Shoulda, woulda, coulda. But it ended up going really well for us. So within a 6 month period, we sold it, and we had to pay like $700,000 in prepaid interest. But our investors still were able, to get a fair return, and it worked out for everyone. So
absolutely. Plus, your investors are happy campers, right? They put their money in expecting like a 4-year hold, and then all of a sudden
exactly.
Christmas comes.
Christmas comes, and you get it back with a good return. So, so everybody's happy, and it just goes to tell you that you never really know what's going to happen, and kind of seize every opportunity that comes your way, because you never know what's right around the corner.
Yeah. And this one you closed January 2019, so it's pretty recent. With the market being so hot, how did you source that deal? Because deal flow is everybody's issue right now.
So that was an on-market deal. I think it'd been on market for a long time. It's in a little bit of a tertiary market. But my business partner, Glenn, has owned properties near there. So he knew and understood the market well. And for us, I think it sat on market for a while. Nobody had bought it, and we were able to kind of negotiate a better price because it really wasn't moving. There wasn't a lot of activity. So it worked out for us. I think we bought it for $55,000 a door and sold it for $70,000 a door within a 6-month period.
That's great. So, I love that
awesome.
story.
Yeah. That's great.
Yeah. So how has getting into real estate impacted your life so far? You're still in your mid-20s. So tell us about the impact it's had and what you've been able to do.
So real estate, in my opinion, is incredible. The first 2.5, I'd say first 2 years of being in real estate for me was a consistent, steady grind. I went from first starting, I wanted to get into wholesaling and flipping because I thought that's what I had to do to go and do the bigger deals. I did that for a couple months and decided, I saved up a little bit of money and just decided that if I'm going to do this, I'm going to go big. So I started then going into multifamily and apartments. I focused 100% of my efforts, knowing that I'm probably going to make a lot less money in the first couple of years than if I, stuck to the short-term game, flipped houses, wholesaled and whatnot. But in the long run, maybe years 3, 4, 5, I'm going to make a lot more money than I ever could have if I continue doing that. Right. So I think for me, playing that patient game was huge. And it's, after a couple of years, it's paid off really well. I feel I'm right now thinking about writing a book called Financially Free at 23.
I like it.
And I want to just describe what I've been through, starting from, having really zero money and going from being able to do that to buying $40 million in real estate in a 2 to 3 year period at my age. Because if I can do it, quite frankly, anybody can do it.
Yeah.
I don't think there's anything special. There's no secret sauce. It's all about hard work and seizing the opportunity when it comes by. So real estate's changed my life. Sure.
For sure. And let me ask you, how have you found the capital raising side of the equation? Sitting across the table from somebody. Has anybody ever asked you about your age when you're presenting them with the deal?
Yeah, they have. Most of the time, I'm doing it over phone. When I'm talking to investors, we have a lot of marketing out there, and a lot of people get, driven to our website and sign up on our investor platform. So a lot of people don't know my age when they're talking to me over the phone. So I really won't get it there. And I know, I know the industry pretty well now. I know the business. I have a really good grasp on what we do. So I think people can, kind of just, when they talk to me, they know I know what I'm talking about for the most part, and they feel pretty confident in that. When I meet people in person, I definitely get, because I look young too. I don't look like I'm very old. I definitely have people sometimes question it and ask me, and it's pretty funny sometimes. But after they talk to me for a little bit and understand and know, the experience I know that I have a track record now of making investors, pretty good returns. It's kind of just a factor of showing them that and making them comfortable with it. Some people might never be comfortable with that, and that's okay with me. In my experience, has been a very small percentage that really care.
Yeah, for sure. And I know myself when I was in my 20s, I found that, being the young person forced you to be a lot better than everybody else because you had to overcome that. So it was better long-term anyway.
Absolutely. We have to work harder and kind of prove ourselves a little bit more,
Yeah. For sure. So in 10 years, you will be controlling $1 billion of assets. What will your life look like in 10 years when you hit your goal?
Hopefully not a heck of a lot different than this. I enjoy life right now. I've got a lot of good friends, real estate. I like helping people and giving back. I definitely would like to have a philanthropic organization set up at that point. I want to help as many people as I can. That's one of my biggest goals, is to kind of give back. And so hopefully I'm doing a lot more of that at that point, and just continuing to buy real estate, having fun, traveling, just living life.
No, that's awesome. So David, if somebody's looking to reach out, learn more about you and your company and all that stuff, where can they find you?
So you can find me at obsidiancapitalco.com. You can email me at david@obsidiancapitalco.com. You can find me on Instagram, Real Estate Jedi. You can find me on Facebook. Just look up David Toupin, and I'd love to chat with you.
That's great. Well, David, just want to say thanks so much for taking the time today and sharing those stories with us.
Heck yeah, man. Thanks for having me on here. It was a good time.
It was my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.